Jack, overnight, markets continuing to digest, I guess, some of the latest US inflation data, mainly coming in a lot softer than expected. How's this been affecting the markets, and will it continue to do so over the next few days?
Yeah, so late Tuesday night, Australian time, we got the US CPI release, which is their inflation data. Came in much softer than anticipated. So markets were expecting headline inflation to drop a little bit, the core figure to stay a bit sticky, but it came in well below that, which is kind of throwing the markets in flux a little bit. So there was basically markets were pricing in a hike this month in July. That's now been dashed completely. They're expecting a hike later in the year, but it's sort of everything's been pushed back based on this latest round of results. And when you couple this in with the escalating tensions between the US and Iran, it's creating a really big tug of war, which the markets are trying to navigate at the moment.
Okay. And the Bank of Canada, no change to its policies?
Yeah, so unsurprisingly, they kept their rate steady at 2.25%. They've still got hawkish tone, slightly hawkish tone with their forward outlook. They dropped their growth outlook for the year and increased their inflation projections. So markets are still expecting a possible hike later in the year, but then they're talking about the inflation sort of reaching their comfortable level of 2% early next year. So pretty quiet on the Canadian front.
Okay. And Chinese GDP fell more than expected, but surprisingly strong retail and industrial production results. I know you spoke briefly the other day about the relationship between Australia and China. Can you just give a little bit more context around that and why China is such an important market for Australia? Yeah,
obviously our biggest companies in Australia are our banks and our mining companies, and our biggest customer is China with our raw material exports. So the Aussie dollar is very closely tied with how the Chinese economy is tracking, what their production's like and their demand. So what we saw is the GDP, which is sort of their economic health and their growth outlooks, that was expected to drop a little bit. It dropped a bit more than the market was anticipating, but this was offset by increased industrial production and demand and better than expected retail sales. So they kind of offset each other, and the Aussie dollar actually strengthened because of it, because I think the markets were expecting a little bit more damage to be done, but it was actually quite resilient, which was positive for the AUD.
And not too much coming out this week as far as news releases go. We got some US retail sales later tonight. We're expecting much of an impact with those ones?
Compared to what the impact was with the inflation data, it's going to be pretty muted. It will sort of just feed into that narrative and help traders build a fuller picture. But in terms of reacting to the results themselves, it'll be on the minor end.
Okay. And quarter two earnings reports continuing to come out over the next few days. You tell us about these ones and what's involved with these reports and the releases.
Yeah, so this is what traders will be more focusing on this week from a data perspective. Now the inflation's done, so we've already had the big investment banks and Wall Street report. They all beat expectations, blew them out of the water, had really strong results, and that was due to the volatility from the Iran conflict. So the trading desks were doing really well out of that. They're sitting in a really strong position. Jamie Dimon came out and said it's almost getting to the point where it's as good as it gets from their conditions as a bank. What we're looking over the next day or so is there'll be the Taiwan Semiconductor Manufacturing Company will release their results. They're one of the biggest semiconductor firms in the world. So markets will be looking at their earnings reports to sort of validate the AI expenditure at the moment. If it's positive, that'll give the markets confidence to keep piling in. If it comes in softer than expected, that'll again give the market a bit more jitters like we had at the start of the week. And then Netflix will also release their results, and this will look at consumer resilience. Obviously Netflix and those subscriptions are sort of a luxury for people to have. Cost of living pressures, they're some of the first things to go. So if people are spending money on these subscriptions, it shows good consumer resilience, which is healthy for the US economy. So these are two key reports over the next day or so that the markets will be interpreting.
Okay. Have you any thoughts on, I've heard some arguments around the Netflix release that Netflix is transitioning not so much from a luxury good, but perhaps replacing other expenses, for example, staying at home rather than going out and spending money. So Netflix, there's an argument that Netflix may actually be, a sign of people, contracting rather than spending. So have you heard anything on that, and how does the market sort of see that?
I guess that's what markets will be trying to figure out with this report, because like you said, you can argue it both ways about what it actually reflects in the broader economic scheme of things. But I think you're right with it. Cost of living going up, food prices going up with all the oil increases, people staying home and watching Netflix rather than going out could be a good thing and almost a bit misleading in consumer resilience. So I guess that's when the market will also turn to the retail sales, which is sort of broader looking, to try and paint that picture. But the interpretation is pretty subjective at the moment, I think.
No, it's an interesting one to look at. And the pound dollar, so the cable, big sort of 24 hours for cable. What's driving the movement here?
It's pure. I mean, this is a lot of the currency at the moment. It's the dollar driven. So obviously the dollar's weakening. The rate hike that was expected this month has been dashed, pushed back later in the year. The cable, BOE is expecting the market's priced in a very short-term rate hike in the near future, so that divergence is pushing up the cable quite significantly yesterday, as we've seen.
And the Aussie dollar, presumably a reasonably similar relationship, plus the news with China?
Yeah, so this is just showing the positive result yesterday from the Chinese economic data. Also, the tensions in Iran didn't de-escalate yesterday, sort of fell pretty flat, which is sort of gave the Aussie dollar another nudge given our risk exposure.
And Ethereum, we've talked a few times around Ethereum. Can you just remind everyone again, what's the relationship here with Ethereum and some of those other currency pairs and sort of global trends?
Yeah, Ethereum and Bitcoin are sort of acting very similarly to how gold is acting at the moment. So again, very dollar driven. With the dollar softening, these cryptos and precious metals will get a bit of a boost. Again, they're non-yielding assets, so you don't get any returns by purely holding the asset itself, like you would with currencies or bonds. So it's that relationship which is driving the price at the moment.
Okay. And the euro dollar, normally one of the least volatile products in our offering, but starting to pick up a little bit here. What's driving these ups and downs?
Yeah, we can just see the peaks and troughs over this week. With the euro dollar, again, a lot of this is US dollar driven with the changing rate expectations. The European central banks sort of a bit mixed with how they're reacting to things and very muted. They haven't had a lot of data recently compared to the US. So this is basically looking at the dollar, and again, it's very tied to the Iran conflict, and you can see it sort of just ebbing and flowing as traders try and figure out what the outlook is and where everything is sitting.
Yeah, I think it's important as well to note with the euro dollar, we're seeing sort of 1 cent movements here, which doesn't sound like a lot, but the euro dollar is typically a quarter of a cent movement in a day either way, so it does provide some context here that these moves are reasonably large for this currency pair, and obviously a huge currency pair for the globally. And the chart of the day, New Zealand dollar.
Yeah, just looking at the New Zealand dollar, the Kiwi, how it's performed over the last 2 years. We can see It's had sort of 2 descending channels for a big portion of 2025, and it's headed back in one this year. So we can see it's sort of bound within those lower and upper boundaries, sort of acting as support and resistance. Then you can see that purple zone in the middle has sort of acted as the key pivot. So the price keeps testing it, bouncing below it. In the good times, it sort of acts as the support. And right now we're sort of right in that zone at the moment. The moving averages, the short term and long term, are both converged at that point. So we're kind of at a key inflection point. The soft US data has sort of given the Kiwi a little bit of a boost, so it might now close above that inflection point. How it now tests the upper bounds of that channel will be what traders look for, because both of the central bank outlooks in the respective regions are pretty similar with how they're dealing with inflation.
And the article of the day, what is Trump talking about here?
Yeah, so obviously Liberation Day in April last year was massive for markets, where Trump imposed tariffs on all his trading partners. Basically earlier this year, the Supreme Court in America ruled that as illegal and ordered Trump to pay back all the money he gained from those nations through the tariffs. To date, he's paid back $80 billion that he gained from those tariffs. They're expecting that same amount to be coming in the future, bringing it to $160 billion altogether. So this is just looking at the impact and how it's impacted a couple of Australian companies who obviously had the tariff imposed on them.
Okay, nice one. Yeah, good one to read. Thank you, guys.